Hello traders, today is the 11th of February. My name is Neville Hornsey, market analyst YouTrading, and today a particular look at the pound versus the Australian dollar. But the reason we're looking at the pound Aussie today is because YouTrading.com for its heat map shows that the pound is currently the strongest of the currency pairs, and then we've also got the Australian dollar the weakest, closely followed by the euro, but even the euro is stronger than the Aussie today. So we're looking for going long pound and short Australian dollar. Looking at an economic calendar, we can see that this morning, just as the UK was opening, we had some GDP news and UK manufacturing output. And UK GDP preliminary year over year Q4 came in better than expected, but more importantly, we also had a revision higher from the previous reading. So that's all good. So pound doing well on the back of this good data. Looking at an active trader platform, we've got the pound Aussie sentiment indicator here. So it says 37% of traders on this platform are trying to short and 63% are trying to go long. So 63% of the traders are looking at the Forex heat map and thinking that it's a long day today. So they're going to probably get some sort of reward today. However, as this number builds, we get above 63, 65%, then I'll be looking to fade them. So generally, these guys on the whole are wrong. So we generally use this indicator as a contrarian indicator. But today, I just want to sort of show that they're going to probably do quite well. We've had a bullish move up from the lows of November 2021 to the swing high here, 28th of January 2022. So, Aussie pound has been going higher. If we look to recent times, we've got a swing low, which was taken here. So like we've got this 1st of February swing low. Then on the 9th of February, that came down, took out that, closed below it. So it's a decent rejection of any buying that was happening here. They just got absolutely rolled over. The next daily sort of swing low of interest would be this one, 1.87595, as that was the last low really before this swing high. So we're looking to go short against a building retail trade long position. But today, like I said, pound is strong, Australian dollar is weak. So we just need to accept that today is not the best day to go short. So we're going to look for a short in the future. So that means we look for an area between this swing high here and this swing low, because if we get above that swing high, then again the price action becomes bullish in nature. We've also, if I just put on the EMAs, the daily EMAs are all pointing in a sort of upward direction. So momentum's been going higher. Price action up until recently was going higher, and we've just had the first indication that the bulls are giving up and the bears are going to take over. So just removing the momentum EMAs. So we're going to look for an area between this high and this low, so this range. And what I'm looking for is like an imbalance. So where we had an impulsive move away from the highs, that shows that it was selling pressure. And that happens quite rapidly at times. So there'll be orders left up there. So there'll be an imbalance. If you look back through all of these sort of candles, you can see that they overlap each other. There's no sort of real gaps, spaces. If there was a gap, then it gets taken out. So we're looking for a gap which needs to be sort of filled in, backfilled, a lot of the futures traders call it. But the imbalance itself, needs to be tested. So we're looking for highs up to this candle's low. So that's around the 1.908. And then the high of this candle here, because it didn't quite get any higher through this candle, we're looking for above the 1.90463. So just putting like a red box there helps. Going down to a 30-minute chart. I mean, you can choose any period of time between 1 minute and a day. So you choose your sort of favorite time frame for intraday trading. For me, 30 minutes is good because you get, to see the information still. So you can see here, swing high, swing low, lower swing high, lower swing low. That could be a correction over, or it could be the start of a downtrend. Because these guys are long, we're looking to go short. All right, so just looking for imbalances in this area. I can see that generally all the prices were double checked. So they backfilled. Once they moved away, they backfilled just to test it for resistance. They found it, they dropped it lower. Even here, you can see that's where that the sort of top part of this candle is the low of this daily imbalance. So we've got, several pips to go higher before we get into the imbalance. So we could do that today. The pound Aussie can move, several hundred pips a day if it wants to. What I am noticing is there's a imbalance here. So on the 7th of February, we've got this balance area, then an impulsive move to the downside, and it didn't get filled in. So we've got that area there between 1.9093 to 1.9105 as a potential target. Lots of traders will be using fibs. So if we just pull a fib down all the way from the top to the bottom, we can see that currently the 618 is proving to be, quite a key resistance level at the moment. So the 1.904 is a 61.8 retracement. Obviously, some sellers stepped in, or maybe some buyers took some profit, and we had this pullback. But I want to get as close to this high as possible before going short, because then I can keep my risk smaller and my sort of take profit further away. So we're looking for another push up higher, probably going to get through this daily imbalance and then just sort of tag into this intraday one. So I'm looking to go short on a test of that. So what I want to see is a rejection, some sort of a wicked red candle come down, and then we can place our short, somewhere around there, put our stop above this swing high, because that's where this idea gets invalidated, pull it all the way down to this swing low here. And if we go back to a daily time frame, just so we can see more of the data, and if I just collapse that, shove this over there. So we've got our trade here. I said that this swing low would be ideal as another target. So if we just leave that there, you can see that if we do get in on a short around the 1.909, then we've got a risk to reward of 1 to 4, potentially, if we hold all the way down to here. So that's the trade idea. That's how I use the Forex heat map, the fundamentals, and the sentiment to come up with a trade idea, and then look for price action to give me some sort of entry. Okay, I hope that makes sense. If you do make some money today, make sure you sort of close out, go home happy. Don't go into the weekend feeling all miserable, and start next week on the up. Right, have a great weekend. I'll speak to you again next week.